Yes. Okay, so we're back. I think this is video 7B. We've been looking at indicators. And what we're looking at here today is a live picture of the Dow Jones Industrial. It looks like we're up about 600 Dow points. Pretty cool. If we go to the SPY, which I'm currently short, which we'll talk about shorting later in the thing. A lot of people wanting to cover their shorts. That's because shorting is confusing. And we'll talk about how you have to look at shorting different than you look at buy and hold, okay? Or look at trading. And the way that I short is through hedging, okay? So it's slightly different than purely shorting to trade. But let's not complicate things. We've been looking at the MACD. We've been looking at the MACD, right? And what do we see on the MACD? We saw the market sell off. Take this up, right? We saw the market sell off. This is the previous high. The market sold off. This was our stage 4 decline. Remember of our patterns, right? Sideways, up, sideways. Well, you had the little, it's not perfect sideways there. Not as clean on the index funds as on stocks. But this is the pattern. Over and then down. And as it appears now, the over was right there. And so what are you seeing? That tells you, the histogram, like we've been talking, that the pressure to the downside started to lessen up. What is this measuring? Moving average convergence divergence. It's measuring the price, the distance between the 12-day and the 26-day moving average. As those moving averages converge, because price stops dropping, so see how as price starts dropping, look, the moving averages are starting to converge. When they converge, what happens? You get crossovers. Now, the reason these happen pretty similar to the MACD is why? I'm using a 5-day, a 10-day, and a 20. Not a lot of difference between that, maybe 1 day or 2 day difference between that and the MACD 1226 crossing. And then, of course, this is a static 9-day moving average. We talked about that. This red line is a static 9-day moving average, and you'll see it just flowing along. The black line is the difference between the divergence or convergence, MACD, moving average convergence divergence indicator. That black line is now again, don't let this confuse you. It's on TSI. It'll be exactly the same on the MACD. This black line is that formula in the background, the 12 from the 26, and are those converging? And as they converge, they will cross the 9, issuing a sell signal, or a buy signal, in that case. And so if we just looked, and you can't just use this though. Remember, this is all part of a piece of a puzzle. So as we look at the pieces of the puzzle, let's put a vertical line every time the MACD crossed. You get a little whipsaw here. See it? Have they crossed yet? No. Where is the momentum to the downside? Momentum has changed, right? So remember what we talked about on getting long. What am I looking for? I'm looking for a box or a base, right? Price to go sideways. And I'm looking for what happened in the MACD, it to go the other way. And we're seeing that. We're seeing that. I told you I was short. If I'm short, I'm looking at an inverse to this. On the inverse to this, it's breaking out. Would I cover my short because of what I see is obviously price possibly breaking out to the upside? No. My stop on my short is right here. And I'll hold it till it's hit. Okay? I've already committed to that trade. I'm not going to get in this game where I'm in it, I'm out of it, I'm in it. Once I put that trade on, I put the stop, I stay with it until it gets hit, okay? But I can look at this and analyze and say, okay, that's still bearish. This is still below the zero line. This is still on a sell signal. We're still below the 20, right? But we do see price changing. And that first sign of that was the MACD starting to tick the other way. So this is the value the MACD brings to you. It's an early warning system. It's a system to help you confirm the box if you're trying it. And again, it works easier on stocks. So let's look at something like, let's look at space. Where's that at? What do we see in space? Now, to make this, any of this work, we have to have some belief that price is worth more. And I'm not going to go much into fundamental analysis and reading balance sheet, because I'd be lying to you if I told you I do that. I don't do that. I do research companies. I do make sure they're legitimate. I do make sure they have a product that people want and they have actual sales and all of that. And then I go to people like Morningstar or Zacks or TipRanks, anyone that has a good reputation. They've all been to finance school, business school. They know what they're looking at. And if they say, hey, based on sales, based on momentum, based on growth potential, this company's worth $26, and you go look, and I use several different sources. I like TipRanks, I like Morningstar, I go to the street sometimes. I get a consensus, and then let's say they all say it's worth $27. Well, does that line up with my $23 target? Hells yes. I just need it to go to 23, and they say it's worth 27. All the fundamental research I need to do. Now what I need to do, I need to catch me a box. And you can't call it a box if price ain't above the 5-day moving average. That's just a little side note. I don't have that in the books. That's not 100% of the time, but almost all of the time you don't have a real box. I just want to see I need to see some disruption. I need to see some moving average convergence, divergence. I need to see some divergence. And that is divergence, you see? Look, over here. Price began to diverge where? Right there. Was it done going down? Not quite. It was a little early. You see how it's a little early? So you can't just jump on it. But when it starts to do this, diverge, it's just like a warning light. We're going to combine it with 5 or 6 other things. They're going to make us determine whether this is a good trade or not. Here's another case of back in the box. We had this box. This one got a little jumpy. You see this? Could have knocked you out. The next day, back in the box, you buy that. I buy that. And then we come over, fell back out, came back up. To me, that's close enough back in the box. I like to wait till the close, because you'll see this happen where it came all the way down to here and then it came all the way back up. I would not close that trade out. If you're using hard stops, that's, you're going to run into that where you're going to have that problem. So this may have been one that got you. Then, it jumped up. That's a stage 2 breakout, ran up. We were in this trade. It got up there. I want to say, yeah, we took profits. That's our previous, I used this little zone. You could have just as easily used this. That just seemed like a stretch because the company's only valued at $26. So I just made the determination, well, if it's only worth 26 and the previous high was 26, let's just take that down a little bit and let's use this high. You see how I just used a little logic there? And that's some gray area. That's going to take time, you learning the stock market and learning the stocks you're trading. But if you look on space, you see the pattern, man? Just big picture. Again, you got to learn to do this. Well, let's leave the 20. Let's get rid of this. God, I really wish someone would have. I had a guy kind of do what I'm doing here with you. Learn to use your charts, man. I can't stress this enough. Learn to use your software. The other day I posted, like, if you go to ARK Funds, right here, ARK Funds, I track all of Kathy Wood's, my friend Mel, right? Look, she has her own folder. Why? Because Mel be dropping some bombs, man. So I go look and I put them in there, and I don't buy them all, but I just kind of keep an eye on some. What else do I have? ARK, Kathy Wood's portfolios in here. And I'll show you how I use these. Learn to do that, okay? Learn to map that stuff out. So, do you see what I'm going to show you here? See that? See the box? It's a really big box, but it's a box. See how jacked up this all got? Above the 20, below the 20, above the 20, below the 20. You know how you know that's bad? Look, you see how sideways that is? You see how this just went away? See how sideways and nothing that is? See it? See how sideways and nothing that is? And then the moving average starts to go sideways? That's what you call crap. Consolidation. If you're in this, you've got to let this become your stops. This is just market movement, okay? Yeah, it's above the 20. Would I have called that a breakout? It's breaking out. But until it clears this box, which was that day, that's a bona fide breakout. Would that have got me in and added to my position? Yes. It is above the 20. So you see how the 20 helps us confirm, but yet we're still doing the pattern, baby. Look. And now, remember we talked about the RSI. So what also helped us? If we're right in here, and there's the breakout, right? What do we see? The MACD crossed, histograms to the upside. Look, ADX, we haven't even got to this indicator confirmed. So 1 confirmation, 2 confirmation, 3 confirmation, 4 confirmation, 5 confirmation, the pattern. Look, sideways, breakout, target. How do we know to sell up there? Where's the RSI? 70. You start to sell. And when we hit a 70, RSI goes extreme, every day on that top candle, I draw my line across. I'm assuming that's it. And every day that holds true. Look, that 1 bar, 2 bars, 3 bars, 4 bars. We now have the making of a box, right? Let's clean this up. Let's clean this up. This is exactly how I trade in real time, okay? As we would have got 1 bar, 2 bar. The moment this showed up on the chart, that bar, that happens, I start doing this. And if the next one goes higher, I raise it and I raise it. What am I doing? I'm trying to build the box. First warning sign that a box needs to be built. Second warning sign, the histogram, MACD, moving average convergence divergence, it begins to diverge from recent price action, which was sideways, breakout, sideways. What is that telling me? Price is extreme, right? MACD starts to go the other way. You need to lock in some gains. This rolls over. What does that tell me? What's fixing to happen next? Most likely, we're going to close. So I would sell some more shares. I want this position even smaller. And then what happens? Stage 4 decline. I should have less shares here than I had here. I should enter in with shares. I should have took shares off, definitely took shares off, and now I'm riding down my core, or I'm not in it at all, waiting for what? Sideways action to buy the breakout, to do it again. And it would play out in stock after stock after stock. But if you look at the stock and you can't see the 4 stages, you cannot trade the money flow, okay? So I'm just randomly grabbing some stocks now. Here's a good example of one that was trading just fine, and then it got a little crappy. Let's just call it what it is. There's our breakout, runs up, and then what? Sideways, and look, you see that? Look at this. Look at that. And then you start drawing your box, and look how long it held. It gave you 2 weeks to take profits. So as we're watching that, when do we need to start getting concerned? The MACD, moving average divergence, right? Starts to go the other way, where around day 3 or 4 in the box, that's usually when it happens. I don't even need these indicators anymore. I know I can see it in my mind with just a blank chart where the indicator is, because I've looked at it so damn much. The indicator isn't to override price. A lot of times when I start teaching this, people go, you got to get out. No, it could be wrong. Price is king. As long as price holds this box, you can stay bullish, right? You could downsize the trade if you made a bunch of money coming up. It's not until it breaks the box, which is like right there. Even though when it rolled under the 20 here, if you haven't taken profit, you better. Look, all of these line up. 1, 2, 3, 4, 5, and 6. Stage break, out of the box, below the 20, 5-day crosses, MACD rolls over, convergence, divergence, and look, all 6 line up. And where do you think this thing's going? Down. Until what? Till it stops. You would do the extreme onto the downside. Did it ever get extreme? No. Do you see the advantage when we can get it down and it goes extreme and then goes sideways? Yeah, what? It's setting up for what we saw over here. You see here, it went pretty, but if you notice, this doesn't seem to get into the extreme on the downside. It gets close. So if you see that pattern that it just gets close, then you're just going to have to play that it gets close. If you're in a stock like INO, or what is it, NIO, it may not sell off very far, right? Look, same thing's going to apply though. RSI is extreme. I push my line across, and look, it works it off in time. It doesn't ever go down. So you don't want to abandon the trade, right? And then look, it breaks out again. So as you learn price and reading, you know, what is this? It's a breakout, man. This thing's been ruthless. This is the kind of chart that I usually just stop trading and I just hold my shares and just let it go until it doesn't. I mean, I call them runaways. This is what happened in Square. You know, way back here, I got long, I took my profits like I show you, and then every time it went to an extreme, I just stopped selling. I just sat on it and just watched it go higher and higher. Just sits in my portfolio, just slowly going higher and higher. When you get them, just leave them be. Don't fuck it up by trying to trade it more. Just you got your shares, let it go. Go trade something else. Just leave it be. Stage 4 decline was our first decline, and I sold half my shares. And, you know, and this one happened so fast, there was a support level there. This can confuse people. If it happens super fast, like it just breaks, if I look over and see support, I'll throw that stop right there. It already broke on me. I mean, it went from here to here that fast. And let's say for some reason I didn't get a chance to. Why? Look across. Resistance, resistance, support. And look what happens. Support, support. That is so common. That's a nuance that you're going to learn. And we haven't even gotten to support and resistance. You see how that would have helped in that situation? And look, RSI was extreme. The MACD was going down. It wasn't like we didn't get a warning that this was about to happen. Your warning came right there. You had this. You had the crossover. You had the divergence going down. And you had the ADX growth thing. So, you know, that would have been a spot. You could have closed the trade. And then what? There's a new breakout. There's a new breakout. And what does it do? Runs up to where? Extreme price. You start drawing your line sideways, right? And what happens? You form a box, right? How do you know when it might break? MACD convergence, divergence. Look, this is where it has started doing it. Boom! Right at the top of the box. Oh my God. Oh my God. You see that? Right there. When this rolled, and that was extreme. That's sell some shares. Hello, Gerald. That's what it's doing. And so as you begin to learn these, does that mean you get all the way out? No. Why? You might catch a square, man, like this. It may run for 5 months. So all it's saying is on this recent trade, lock in some gains so that if it does go stage 1, stage 2, stage 3, stage 4 on the downside, you're not riding that much down. This is a beautiful one. Has it gone to an extreme low? No. Is this a box? No. It's not a box. You could, if you just wanted to be stupid aggressive. I don't know, man. That's not a box enough for me. But look, we are starting to get, you see what's happening? Day 1 of what? Moving average convergence, divergence? What is that telling you? The momentum is what? See it? Look. Where was it at over here? Third or fourth bar. It's happened a little early here. What is that telling you? This is probably done going down. Where would our target be if we get in this as a trade? 190? Yeah. 190, or probably keep an eye on the RSI again. See what I'm doing? I'm getting this trade ready to go. What about DraftKings? Where's that? Now this one's been tricky because the histogram keeps coming in, but what's not happening? What's not happening? Even though the histogram is doing its thing, there's no box. It has, remember I mentioned to you about closing over the 5-day moving average? It has not once done that. Down this whole thing. Today could be the day. And we would have 1 day, 2 day, and look over here. You've got some support. You might could take a shot at DraftKings here. MACD's telling you, look, it's about to come out, but you're trying to buy the bottom here. So go light, go light. I mean, even when it's stopped over here after its big down crane, look how long it just went sideways. Okay, this thing is not going to run away without you. And the next side target would be maybe 52 and then 62. So when you buy the bottom like this, you got to nibble, man, because you're going against the trend. But what do we see? Stage 1, stage 2, stage 3, stage 4. Are we going into a stage 1? This is stalking the trade, okay? And I'm trying to bring it all together for you. We haven't even got to the moving averages and the price breaking above the 20 and then the trigger, the 5-day crossing. You see how we begin to bring all this together. So we need to learn the RSI. What we're really looking for is the extremes and to a lesser extent, price breaking above the, I'm not as overly concerned with that. I'm looking for the extreme highs, extreme lows, and when it goes flat. When it gets stuck in this flat zone is mostly what I'm looking at. On the MACD, what am I looking at? The crossover and what? The divergence convergence, which shows up on this. I'm looking for this to go the opposite direction to tell me the down move is over, right? And the up move may be about to begin. We want to pay attention to this. When it gets tiny like this, what does that tell you? No price movement. Sideways. What does that tell you? Sideways. What does that tell you? Sideways. What does that tell you? When the indicators go sideways, not worth shit, not worth shit, not worth shit. None of this matters anymore. This is sideways crap. These indicators are no longer of any use to you. The only thing that matters here is price breaking out of the box, which this was a stage 2 that went into a stage 1, and that can confuse people. This was, and so watch, this was a stage 2 that turned back into a stage 1. That just happened to us with Groupon, and that confused people. So look, stage 2, stage 3, stage 4, stage 1, stage 2, stage 1, stage 2. You see what happened there? Stage 3, stage 4, and possibly now a stage 1, but we gotta wait and see. You see how it did that? So now we know what it's in. So if you say to me, hey, Joe, what do you think about this stock? I don't know. What stage is it in? Where's the MACD? Where's price in relation to the 20? Where's the RSI? You see how I'm going to look at a stock? Before I even bother to go analyze it and look up the company and the products, I want to know what position it's in. If I look over and it's in a breakout position, oh, now I'm going to go look, right? Now, let's talk about the risk of stocks. You got to be able to handle this. I can teach you to trade on these videos. What I can't get you to handle are the price shocks that will come your way. You see that? That was a 20, 30-something% drop. That happened to me the other day. Look at Nokia. 20-something price shock happened the day before. These are all recent. Okay. I get grown men who call me almost in tears. Okay. What are you going to do on this? What am I going to do? Well, I'm going to trade my way out of this. I'm going to trade my way out of this. I'm going to get some of my money back. Why? Because this stock trades the price. The price just changed, but I'm going to trade my way out of this, okay? What's forming here? A box. But look what hasn't happened yet. Why haven't I started buying shares? Some of my friends started buying shares. It's because they don't read my book. They're not actually following my strategy. I can show you the strategy. The hard part is getting you to actually follow it, okay? So until you see divergence, convergence, which we've been going over for multiple videos now, do you buy this? No. There's nothing to show that the downside evidence is over. Are we building a box? Yes. How do we know? There's an RSI extreme, so then I start drawing my arrow. If this every day that there's more and more bars, it's telling me what? That this may be good, but I need some divergence, right? And then I can start to nibble at this, and my target would be up here, right? But the company needs to be worth at least that, so we got to go check. I'm sure it got downgraded. So now we're just playing the same game at a lower price. I played it over here, and I ran it up, and then I ran it up, and then I got out, and then I tried it again, and then bitch slapped. Huge price drop. That is going to happen to you. And then you're going to DM me and go, what do I do? This is what people do. And I say, 3-day rule. It depends on the kind of stock you're trading. I trade Nokia as a core position all the time. So there's no getting out. I just got bitch slapped. I got to just sit here and take it and wait. Don't do that if you don't trust the company or understand the value of the company. You know, this is why you can't have 3 trades. This is why I've got 40 trades, because this hurts, dude. What's another one? MICT. Look at this. Yesterday, it dropped 41% in a single session. Now, if you'd have had a stop right here, you'd have got stopped out for sure. But, you know, if you didn't, you're down. What do? You stick with the money flow. You just wait. You just wait. You let it set up, okay? You let it set up. So I'm going to approach every stock the same. Every stock the same. Where's the histogram? This is when I started adding 2 Polo. You see the pattern? Sideways up, sideways down, sideways up, sideways down. And what? Now we appear to be breaking out. So I started buying shares. Histogram's going that way, you know. This is bullish. I think you could start adding to space here. So I don't want to run these too long. I think you can see what I'm doing. You see how we're bringing together the RSI with the MACD histogram, with the MACD rollover, with the 4 stages, and we haven't even gotten to support and resistance levels or moving averages. Very exciting, man. Appreciate you guys watching. You're going to get out of this what you get out of it. If half the people make it through the whole end, I'll be shocked. Trading is tough. There's nothing easy about trading. I can show you my system. It's going to take you years to appropriately implement it, figure out the kind of stocks you want to trade, and to do it right. And I'll close on this. Start creating files for yourself. So here's some stocks under $1 that I like to trade, and you can click View All. You can just go down the list. And then I just go through all my indicators are here. And real quick, I can look at this, go stage 1, stage 2, stage 3, stage 4. I'm not interested. Ooh, breakout. Uh-oh, what is this? Discovery Incorporated. Doesn't Kathy Woods own this? There it tried to break out and didn't run, though. What would be my target? Well, see, and then you could go do a little digging. There's a breakout. Also, look where it stopped. Previous low. Right out of the book, man. What is this? Stage 4 decline. Nothing to look at, right? And I could just go down. Nothing to look at here. Nothing. These are $1 stocks, so they're going to move real weird. But I do this with, these are the 70 stocks that I follow on a daily basis. These are ones that I'm trading all the time. What do we see? Stage 2 breakout, Napa Auto Parts. You could buy that. Be a $170 target. Apple, still bearish. ABV, we're in this one. Remember, we got in right here. Got in on the breakout. Where's my target? $94. So that's going to take a minute. It's had a big move. So usually when you get a big move, it's got to consolidate a minute. We just keep on going. Some of these I'm in, some of these I'm not. Adobe setting up. So look, if we came to Adobe, what are we looking at? Do we got any support? We got a level of support there. We got 3 bars. Where's the MACD? It's starting to tick. Everything's starting to turn. You could nibble, and where would your target be? 520. So you'd buy a few, let it set up, buy a few, and then on the breakout, right, the breakouts, what you're hoping for is to catch a run like this. On the breakouts, you would buy them, right? So you nibble on the low, and then as it moves up, and once it breaks out, you're done. You buy your last thing, and you're done buying. Air, but look at this. When we get into resistance, this is resistance. Like this is as clear a resistance as you can possibly have. I mean, look at that. What do you think happens when price gets up here? What does that mean? That means there is a giant institutional trader that every time price gets in this zone, they sell their shares, thereby keeping the price down. It's called distribution. Accumulation, markup, distribution, markdown, accumulation. Now maybe you might say it's accumulation. We will know if it breaks out and runs, and then the target would be what, $28. But until it gets above this resistance line, anything above the 20 is bullshit. Look how sideways that moving average is. Sideways. What did I tell you? When they go sideways, they don't have any value. The only thing that matters about this stock is the box that it's trading in. You could buy on the lows here, and I wouldn't be buying and selling. That's dumb. But you could be at an accumulator here, because if this breaks, there's no reason to own the stock. Support and resistance, man. Good stuff, man. Hope you're hanging in there. I hope you're getting this. I'm going to keep dumping on you. We got a lot more videos. I'm going to do repetition is the mother of skill. We want to bring it all together like a soup, a recipe. No one piece other than price is most important. Don't let these indicators get you down in the weeds. Just let them. They're just trying to flash signals to you of turning points is really what it's all about.